Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Open. And ding, ding, here we go. We've got some big-time action here on the not the WTI, but the ES. That's going to be your E-mini S&P 500 futures. We're looking at this 9 EMA on a 1-minute chart. Typically, we're in the mid-session, so we're always watching this when it does not move. But right here, you can see that the volatility is definitely in play because the opening bell brings players from all over the world, brings big cash players, brings hedge funds, brings traders, brings pretty much everybody to the table. And right now, we're starting to see a little bit of price action hit the board, and that's exactly what we need to make this 9 EMA work. So we're going to try to execute a few of these trades. We still have a little bit of time here for one of these to set up, but I do want to sort of show the volatility that does hit the market on the opening bell, and it may seem sort of routine, but a lot lot of folks ask me this question an awful lot. Shane, when is the opening bell? And I'd say, well, it's 9:30 a.m. Eastern, 7:30 a.m. Not Pacific, but Mountain Time, 6:30 a.m. Pacific. So you've just got to always know when this happens. It happens every day. We open the market, and you see a big rush of volatility across really all markets right here. Let's take a look at this US 100 CFD. Take that right down to a 1-minute chart, and you can see the big participation, big volumes, big action. And right now, the market is trying to figure out exactly what it's going to do for the day. We've got traders in there. We've got institutions. We've got everybody in the game is trading right now. So this is always a time when I'm watching very closely. Not really on ever during the U.S. Open. Very rarely. I like to evaluate the price action and put my thinking cap on and see which way we're going with things. But this is fascinating stuff. We're going to get a few trades today. I have a pretty good feeling on it. So I'm sort of watching the markets. We're going to go over some news events. This over here, brief synopsis of what's happening. We had it's not a ceasefire that was announced yesterday by Trump, but he did give Iran until, I believe, April 6th. Sort of extended that long deadline that was put out last weekend, and the markets have done absolutely nothing. Crude oil's on the rally. Stocks are off because nobody's buying any of it. Nobody believes any of it. They think that potentially there's going to be an invasion. There was also some big headlines that were talking about potentially a rate hike at the next Fed meeting, and this absolutely blows our expectations right off the table. So as you can see, I mean, there's big action here. I typically don't like to trade the open. I like to give the market at least about an hour to 90 minutes to set up before I get in there and I start attacking my support and resistance zones. But we're going to wait and see exactly how this develops here over the next 30 minutes or so, 40 minutes, and see if we can get some live trades in. We've got some key events that we need to cover. I'm interested in that 9 EMA. We have a trade update. That Euro Australia dollar is coming our way. Great Britain pound was pretty good to us early in the week. And other than that, the big story right now is the DXY, the US dollar index, is just on an absolute tear north. And a lot of that has to do with the dollar as a safe haven, number one, but also our shifting interest rate expectations. And we're going to talk about that as well. But that's the big headline right now. You can see it right on the top of CNBC. Remember, I don't favor CNBC over any of the other ones. It's just free, and a lot of people use it. So I pull this one up for the headlines. Typically, if something's happening in the markets, they don't miss it. They put their own spin on it, but they report it. S&P 500 falls, heads for the fifth losing week in what? Fifth losing week in a row, even as Trump extends Iran negotiations deadline. So you can start to see the media bias. CNBC is from the NBC sort of branch. I don't even know who owns NBC anymore. They've changed hands so many times. But the bottom line is that this would be your more negative reporting on the Trump administration and the markets. So everything's sort of doom and gloom when you're looking at CNBC, whereas if you turn it over to Fox Business, there's a much more optimistic outlook on what's happening. One thing is for sure, the U.S. dollar index is on a tear. 101 is the big mark. If that 101's taken out, then we're going to get in big trouble with a lot of different things. We're going to start talking recession if 101 is taken out here, and we drive deeper and deeper into bullish territory for the USD over the next 90 days. All right, I wanted to get started with a quick look at that U.S. Open. A lot of action here. Typically, I'm always just glued to my screens, watching everything, not talking, but it's good to see everybody back in the room. My apologies for the delay. Jay Splain, good to see you. Tina Xing, always a pleasure, Tina. Tammy Dude, good to see you, Tammy. Let's see. Joshua, good to see you, Joshua. Welcome. Let's see. We have a question right here, Jay Spling. How to trade the wrecking ball. I can never win on the open. I guess I could just wait and do the orb, but I haven't found it very profitable. Yeah, I mean, it really is up to you. When we trade the open, something like the 9 EMA on short time frames is a pretty good way to do it because you are looking at volatility and just looking to get bumps essentially. But it can be a real challenge to try to trade exactly on the open. Now, I know there's a lot of YouTubers out there, a lot of folks on YouTube that are out there that say, all you need is one trade and I make it in the first 15 minutes of the day, and then you can go to the beach and go out to eat and party the rest of the day. I've seen a million of those videos and I laugh at them because a lot of times the time when you get hurt the worst is right when this volume is kicking the way that it is. However, if you got a big level in play, like a macro support or resistance level, those are really high probability trades for me early in the session, especially right now. So there's a tremendous amount going on right now. I always love to watch the market set up, and I'm going to show you some market profile things and exactly what I mean a little bit later on here in the stream. But you're absolutely right, Jay. I don't know what the wrecking ball is, to be honest with you. The orb, I'm a fan of the orb. If you're having trouble with the orb, my guess is is that you're probably going with a short time frame like a 15. I think that if you lengthen that orb out to a 30 and then maybe look to get in with better entries, like we made the video, how to improve your orb entries, I believe that's the ticket to trading the orb. Just my opinion. But as far as this type of market environment with the Iran war dictating so much policy, I'm not sure that the orb is working very well at all, just because it gets so whipsawed. But great question. I sure appreciate it. Let me see. Haman, good to see you, Haman. Hey, how you doing? Do you think RSI divergences would be a good strategy on a big news day? I'm not sure any technicals are really great on a big news day, just because the volatility is so huge. I always find that on a big-time news day, like not an RSI, but a CPI or an NFP or something like that, I always find that you could really fall on your face, because that initial price action doesn't really mean that's what's going to happen on the rest of the day. I actually love range trading on news days. Watch the news bar set up and then trade off of that range. Something like that's a pretty good strategy as well. So I don't think it's exceptional at all, Haman. I hope that answers your question. Tina Jing, I got in at 12.14 and hit a 3R take profit at 12.44 on the Euro USD, 2.91. All right. So we're off and running. We'll look at the Euro USD here in a second. All right, guys, let's go ahead and get on with the show. Good to see you, Tuku, over there in the How to Trade community. I know this stream sort of got rescheduled at the last minute, but that's okay. We got some things. I got some business I have to tend to a little bit later today. I got to get a little maintenance done on my vehicle, and then I also have to go to the bank and talk about some of the interest rates, some of the yields they're offering on their bonds. They're going up, and they're going up big. I'm going to go down and see if maybe I could get to the trough, be one of the first ones to the trough. We'll see. I'll tell you how it goes on Monday. In any case, this is a good look at our volatility index, our VIX, the CBOE volatility index. You can see that we're getting sort of elevated. We're getting up to that point where I start ringing the bell saying, okay, it's time to be watching things very, very closely. 21's our long-term average, no question about it. That's been the long-term average for about the last decade. I sort of hang my hat on anything between 19 and 21 is being normal. Now, for the longest time, we were down here around 10. And life was pretty good. I mean, right down in here, coming off of this spike high that developed last November. Actually, really since October, you got a big rush there. You got this huge rush last April and the tariff panic. And then we went down, and we're on a steady drive north. Equities were on their way north. And right in here, it got really sweet from November. And then we took this one all the way basically up into our war. So it was a pretty bullish open to the year. And now, it's not going to be the case. Remember, a bullish VIX typically means bearish stocks and bearish equities. And what we have developing right now is sort of a double-barreled shotgun. You've got the VIX coming in. A lot of that has to do with the weekend news cycle. We're going to talk about that in a minute. The Iran war, and then also your U.S. dollar's up. So the VIX is up and the dollar's up. It's not a good scenario for stocks, and you're seeing them getting hit right on the head right now. I think the Dow's off, about 418 points, somewhere in that zone. Not the biggest move in the world, but still, it's a consistent loser this week. Let's go ahead and take a look at that Dow Jones Industrial. Okay, we got a signal here. This is one that we want to take. I'm going to go ahead, and I'm going to send them. I got to get my one-click trader here. One-click trading. Let's go ahead and buy. Okay, this is E-mini S&P 500 futures. You can access the futures. Basically, it's a CFD contract that is on based on that E-mini S&P 500 futures contract, and it is interesting. E-mini S&P 500 is the biggest futures contract in the world. This CFD product is traded directly. It tracks that futures contract perfectly. So if you were going to take a real tight scalp, we probably could have already hit a one-to-one profit target right there. Do I want to take a position this time of day? We certainly could. I mean, I could go down here and put my stop loss down beneath this low and try to build potentially a trade that's maybe up in here, try to get that big bullish move or a buyback. I don't really know that that's the case. I think I'd probably just go with a real tight scalp, something like this early in the day. We're looking for a good immediate positive price action, and you can see right now, 1 minute chart, now it's starting to go against us. You can see exactly how volatile this market is right now. We are 10 minutes into the trading day, and we're either going to get the market to really rally from here and maybe buy back some of those losses in the futures, a lot of which were established during the overnight. See right in here, really a negative beginning to the trading day, and now you're starting to bounce. Do we continue this downtrend, or do we base and maybe roll up and get a little bit of money to the top side? The jury's still out. You can see just how stiff this battle is. I had a trader point out the other day, he said, you're far better off waiting for this to get entered and then pull back to the 9 EMA and go from there, go long from there. But right here, we're getting pretty good positive price action. I think our profit target's legitimate. This is an extremely tight scalp. I mean, I would be tempted to take the money right now just because we're getting a good move during the first 10 minutes of the trade. Now, if we stay, what happens? Well, I mean, now we're back to basically break even. We still have some bullish price action, but we're trading so tight. Our stop loss is so tight here that we definitely could get hit, and then the market could continue in our direction. Okay, that's the break that we needed. We shouldn't be sitting around waiting for just another 1 or 2 ticks. We probably should have taken the profits right there, in my opinion, in my humble opinion. So now what do you have? Price is back down to about break even, and it's going against you. And what happens? You probably maybe get stopped out playing as tight as we're playing right here. So you can see we got a good positive price action move. Now it's starting to gobble us up a little bit. 1 minute charts are about as hard as it gets for trading. But if you're going to do it with a 9 EMA, if you're going to do it with a 9 EMA, you do it right now. You do it when the market is at its most volatile. We got a really nice bullish move here. Now, would I care to take a position? Do I think taking a bullish position is a good idea today? Not really. Not really. That play in that pop was pretty good. So what was our risk here? What was our risk? Was about what? Let's see, 311. What are we looking for on the take profit? Was somewhere up in here, about 260. So you need to be up in here somewhere to get a legitimate one-to-one trade. However, early in the session, maybe you waited for a pullback. You're already in and you're already out. So nice, not the best signal in the world. Clearly, we're going to get stopped out more than likely, but still a nice bullish pressure. This time of day, that's exactly what you're looking for out of a strategy like this. You've got an indicator, you've got a crossover. You're playing for immediate positive price action. Volatility right now is at its peak for the day. You've also seen maximum participation, huge volumes. This is when you want to be doing this. No question about it. Now, as far as trying to pick bottoms and tops of the market, in my view, it's really difficult to do that 10 minutes into the session. Very, very difficult to do that. A lot of traders do it. Some of them come out good. Some of them make a lot of money day trading. Others lose. A lot of people lose because they believe that, okay, I've got the bottom of this market and I'm going to lock in and I'm going to go. And honestly, that is exactly what traders have done here. They said, okay, we've got sort of that sweep, that 10-minute sweep. Is the worst of the selling over? No, probably not. We know the market dynamics are lining up to wipe us out to the downside. This could be a big trend day down. We have to admit that. You've got the Iran war over the weekend. A lot of us believe troops are going in potentially. That brings a different level of volatility to the market to the downside. For a risk asset like the S&P 500, the E-mini S&P 500, trying to pick a bottom this time of day, if you're right, you're going to absolutely kill it and make a fortune. But if you're wrong, you're going to lose. And my guess is you're going to lose a lot more than you win trying to pick a bottom on a day like today in the first 10 minutes of the session. So these are the things I'm thinking about early in the day. I'm always watching price action. What's happening right now with our trade? Not much. It's just right up here. We almost got stopped out here. We're playing it so extremely tight. I genuinely don't care what happens. If we get stopped out, then we'll come back with a longer time frame and maybe try to pick that bottom later in the day. But right here, are we positive? Are we negative? We're slightly positive, but the market is really a challenge. Really a challenge at this time of day. That's why we went on early. I want to show everybody what this is and what this takes to make it in the markets if you're going to trade the open. And a lot of it's out of frustration. I will admit, I'm a bit frustrated. I see a lot of people out there putting videos out going, all right, the first 10 minutes of the day, I've got a trade for you. You can make $1,000 a day, and you don't even have to do anything else. I've been in this game a long time, and I can tell you there's not too many of those folks around that can do that. Matter of fact, I don't know one. And so a lot of you love to trade the open. I like to trade the open, but when I trade the open, it's low leverage. I'm trying to get in and get out. This trade right here with real money, I guarantee I'm already gone. I'm gone right in here somewhere. I would have taken that first $100, $125, rolled on to the next trade. Would it have been the right thing to do? I don't know. Now we're looking pretty good. Looks like we may actually go up and get our points. In any case, I wanted to execute one of these trades to show everybody how to do the 9 EMA. Remember, if you want to trade this strategy, you go ahead and head on over, get our strategy pack. I'm going to drop the link in the live chat here for everybody that's new, and you get something. You get the full strategy pack. You're going to get your PDFs, some videos, the custom 9 EMA EA that I built. You can put that on your charts, and it'll give you the signals of when it's time to buy or sell. We made that one pretty easily, and AI is a beautiful thing. AI is a beautiful thing. I got in there and built that one not too long ago. Did we finally get our move? All right, we got our move. I bailed out just before the getting got good. So pretty good little strategy there. Pretty good little move. The thing that I want to stress is when you play tight like this, if your stop loss is right in here, right on the bottom of that bar, you got hit. You've always got to pad those. Even on a tight scalp like that, you've got to pad that at least a couple of ticks. Personally, that was probably the trade, putting it beneath this swing low and trying to get a bump up into here in the first half hour. However, I see that as being very low probability. I really do. Step back to a 5-minute if you want to try to trade. Pick a bottom, and you'll notice we didn't get beneath the oversold parameter of our RSI. So nice winning trade. I get a lot of feedback on the 9 EMA. Some people really love it. Some people hate it. We took a few losers after those news events during the Fed and whatnot, and I get a lot of static going, Shane, those technicals are tough. And I go, yeah, you're not trading them at the right time. You trade them right now. E-mini S&P 500 futures, that 9 EMA gives you a chance to win when the market is at its most volatile and its deepest, and that's right now. That's right now on the U.S. Open. Okay, let's see. Yeah, going long was a bit risky. Yeah, it was, Tina, but it paid off. We got it, blew it off the top, and made a little bit of money there. All right, let's see exactly what we got. Let's see, Tina hit a Euro USD. Let's go ahead and take a look at that. Euro USD. Well, I mean, we're on the move here as well. Euro USD 1-minute chart. Okay, we're blowing up. Let's go ahead and back this off to, say, a 30-minute chart and see what happened. All right, this is fantastic stuff. Yeah, it's not quite a hammer, but let's see. That's about 6. I've got right in this zone. I've got my charts set to Eastern time, so don't get lost there. But I was making a video yesterday, so now all my charts have Eastern time. I should change that right now. In any case, right there about 90 minutes ago, you had a nice, not really a hammer formation, but really a nice rally, really a beautiful rally there. And if you got in, my guess is you got in right down there around 115, Tina. So I'm guessing that was it was the same. I was waiting for the low of the 15-minute chart. Let's go right here. Yeah, so, I mean, you had a little demand zone set up and a tremendous runner, so that's a fantastic trade. I mean, very, very good stuff. Let's back off and see from our macros, see what's going on here. I don't like the daily chart at all. I mean, I've sort of been outspoken about this type of stuff. I mean, you can't really use Fibonacci's there. Probably the biggest thing you could maybe do would be look to sell using this, and this would be an extremely tight trade, but a spike high to a spike low. This, maybe a situation where you could get a short, maybe at 115.50-ish. But once again, I mean, it's high risk. You're only looking for a few pips. So, like this Oanda has a 1.6 spread on this Euro USD. That's way too big to try to scalp just 5 or 6 pips. So I don't know. I don't like this at all. I think this is way too tight. I would pretty much look to back off and look for my macro levels here. Been very patient with the Euro USD. Very, very patient. But something like this is great. 113.50. We're about 180 pips off of that. But the USD, the way that the USD is going strength-wise, it's hard to see that area not coming into play at some point in the near future. So I'm watching 113.50-ish closely. I know we're trading 115.30. I get it. But if we do get a sell-off here in the next week or so, we could potentially get it. Okay, the markets are on the rally now. The Dow's cut its losses down to about 288. The S&P 500 is down about 0.5%. So we're getting a little early rotation. That's good. That's a good thing. It means these things aren't just going to tank. But what everybody's watching right now is this VIX. This VIX is at 29,999. That's big. That's big. We're right at that 30. So the market, that VIX is coming up. So even though you're getting that bounce in stocks right now, early session bounce, that VIX is starting to rally. All right, there it is. It's 30. Okay, so officially my spidey senses are going off. We've got 30 on the VIX. We had a mid-session sort of bounce in our stocks off of those lows. Remember, the VIX is calculated on S&P 500 options contracts that are deferred in the future. So what this is telling us is even though we just got in on that bounce in the S&P 500, those futures, and we made a little bit of money, it means that rally is probably short-lived, and now we're starting to see the continuation. Now the Dow's off 320. Now the NASDAQ's down. Now the S&P's giving back some of those temporary gains that we just saw, and you can see, look at that sweep lower. This is that's 5-minute chart. This is a 1-minute chart. You start to see this sweep lower. Do we keep going higher here? No. This trend's going to continue. I would almost bet on it. So I'm going to be watching this one closely later in the session. The VIX, watch it. It's important. So right now we're above 30. That scares everybody. That scares everybody in the market. That's for sure. Great trading, though. Good stuff. I always love the early sessions. I always have a lot of fun with them. That's for sure. Now, let me see. Lua. Good to see you, Lua, the king of trade. I don't know if I'd go that far. I don't know if I'd go that far. Then went for the long. Still bearish macro trend of the Euro USD. I agree with you, Teen. I think that the Euro USD is going to continue down. But when? It's such a tough market to trade because it just flattens out and does nothing for long periods. So as long as you're patient with it, you can do very well. But if you're not, you can get burned really bad trying to play breakouts on the Euro USD. But right now, 115.30, I mean, congratulations. That's a heck of a trade early on. Getting a 1 to 3, very nice. Very nice. Tuku, ring the cash register. Yeah, we rang it. We rang it and walked on to the next one. I guess we probably should have held the position, right? I'm not believing this. I call this a dummy bounce. I'm not believing this at all right now. This bounce is temporary in my view. That's my opinion. All right, trade update. Next up, the macro resistance for the Euro Aussie. This is a trade idea that we put out yesterday morning. It's coming into our wheelhouse, so that's fantastic. Anytime that you see the U.S. dollar sort of trending the way that it's trending, or the volatility that's hitting the U.S. markets because of the Iran war, sometimes it's good to step back and trade something that really isn't. It's not 100% correlated to the U.S. dollar. Now, we can make the argument that gold is correlated to the U.S. dollar and gold impacts the Aussie, so the Euro Aussie is kind of a function of the U.S. dollar. But we're not going to do that. We're going to say the Euro is the Euro and the Aussie is the Aussie. And it's going to give us a bit of insulation away from that U.S. dollar. And I think sometimes you need to diversify. You need to spread out your money across multiple markets. I always recommend maybe looking at some commodities, maybe looking at some stocks, maybe looking at some crypto, maybe looking at some Forex pairs. I think that's a good idea. That being said, if you're an active intraday trader and you're just getting started, find a market that you really like and go get it. Learn everything you can about it and get good at trading it, and that can really help you. All right, Euro Australian dollar, you've got 169.05 to the top side, and that's pretty much going to be our short. You've got 167.35. The trade idea was out. I believe we're looking at 168.94s, something like that. So just ahead of this 169 zone, I'm looking for a little bit of bearish price action, some sellers to step in and potentially send pricing downward. If not just for a short period. So I'm definitely watching this one. I think this could be a pretty good trade for us. Right now we're printing about 167.35, so we're still about 170 pips off next week. More than likely, I think next week we're going to get this trade, and it could be really great. Next week's the final trading week of March already. March is gone. March is always a huge month. And when you start taking a look at what we could really do here, maybe on the last day of the month or maybe even in early April, I really like that level. So I'm going to be watching that one closely. As far as what we should be looking at right now, well, I mean, it's WTI crude oil. Let's go ahead and pull up our crude. And you can see there's your monthly chart on WTI crude. Unbelievable. We made some videos on insider trading yesterday that those are probably going to drop next week sometime, just some shorts. But pretty interesting stuff. No question about it. That Monday trade in WTI was really something, and I'm not really sure what to make of it just yet. I don't know who knew, but somebody knew. So here's a good look at our market profile, and we were very, very adamant about let's just get rid of all that garbage there. I was really adamant about this chain being filled in, and this is how market profile traders think. This is how the old pit traders thought. They were always looking for gaps in the chain. You know, a perfect market or an efficient market sort of is like a brick wall. There's no weakness in it. Every level has a brick in it. It's all been traded, right? Well, this right here was a heck of a gap and a really weak brick wall. I call it a weak link, definitely a thin chain. And you can see right here, this lack of volume, we were relatively certain. We put that out on Monday night on X. I said that more than likely is going to get filled in, and that's exactly what's happened. We sort of came down. We sold off a little bit, and you'll notice this is a 30-minute chart. You've got your point of controls all week long, and then right now you're establishing another point of control. Yesterday's point of control is down around 93.50. Now you're establishing an early session point of control right here, right around 96. So this is incredibly bullish. You're trading outside of the overnight value. You're driving at new highs. We have filled in this gap. So we're up in about another 3.25% with crude oil. Where do you think this thing's going? I mean, if I had to bet, Shane, what's a viable target? 100. Think about it. It's Friday. We don't know what's going to happen over the weekend, but we do know two things. Number one, we know Trump's going to say something. We know it. We know that he's going to go online. He's going to be making Truth Social posts. He's going to try to do anything he can to drive the price of crude oil down and drive the price of stocks up, because right now this is the inverse correlation that we've been preaching about for the last month since this war started. Crude oil up, stocks down. Crude oil up, stocks down. That is the only correlation really in this world right now that matters. Our financial stuff with our dollar and our monetary policy and inflation, that's something completely different. Right now, we know that when crude oil goes up, stocks go down. We're looking at a potential fuel shortage. 45 days. It was the Philippines declared a national emergency. They said they have 45 days of fuel left. So if you believe them or not, and maybe you're in that region, you may know firsthand. This is going to be a trend. The Strait of Hormuz needs to be open. It needs to be completely open. That oil needs to flow. It's got to flow. If it doesn't flow, the Asia-Pacific countries are going to get hit first, and that's going to force a global economic contraction. There's no question about it. It's already happening. So when we talk about the economy and what exactly is happening in this war, I will not debate with anybody out there. That the United States doesn't have incredible power. You have incredible military power. You know, the men and women in the armed services, the equipment that they have, the technology they have, they are very, very good at blowing things up. Very, very good at blowing things up. On the flip side of that coin, Iran holds all the cards with the energy trade. I don't want to hear any more about it. We've seen this go on. This is the end of the 4th week. Tomorrow morning, it's going to be entering the 5th week of operations, which was the end of the stated goal. The United States said it was going to take 4 to 5 weeks. Okay, that's great. Iran holds all the cards with the energy. It's obvious now. The Strait of Hormuz is not open. They could not topple the regime in 4 or 5 days. They're still working on it. As far as wars go, still a relatively short war. There's still time for everybody to throw their hands up and go home and go back to relative normal. I mean, believe it or not, that is still possible. The next step in this war is what everybody's pricing, and that's why your stocks are down and your crude oil's up. A lot of folks are looking at a ground invasion. A lot of folks believe that this energy war, a potential starting to target energy infrastructure, they believe that's the next step in the escalation ladder. One thing we know, the bidders are hitting crude oil, and they're hitting it hard. Last 2 days, they've hit it, and they've hit it hard. And think about what's been announced the last 2 days. Trump, incredibly optimistic, says the deals are going great, the talks are going great, they're great negotiators, great. They gave us a gift, 10 oil tankers were allowed to pass through, great, and the markets aren't buying it. The markets aren't buying it. So going into this weekend, it looks to me like people are going to be going home long crude oil. It will not shock me if it's at some point in today's session, Trump hits the news wires and tries to say something to get a hold of this, because this is a very dangerous situation. If you go home about around $100 crude oil and then you see something as an escalation device over the weekend, you're going to open up with a massive crash on Wall Street. You're going to open up with $125 crude oil, and it could seriously be a Black Monday. Trump knows that. The Western world knows that. The Iranians know that. So even though you have all the military power in the world, realistically, the United States, the munitions and the technology is off the charts. The manpower, though, Iran has a tremendous amount of manpower. They have a ton of missiles and a ton of drones. And the ability for them to keep that Strait of Hormuz closed has really been pretty amazing through 4 weeks. They've managed to close it for a month. We're going to see what happens in this war very soon. Very soon. And it all has to do with that strait. It really does. I don't know which way this is going to go. I genuinely don't. Right now, were we right about our market call? There it is. So there was our bump, right? There was our bump, and now it's hammer time. Did everybody see what happened with that VIX, with that volatility index? As soon as that VIX went up over 30, what happened? Let's go to a 1-minute chart. See this? Right here. 9:36 a.m. Eastern. Right there. No, that's not right. I don't know. I don't remember. In any case, that peak right there, what happened on our S&P 500 trade? VIX up, S&P down. So when we were talking about potentially picking a bottom here, we sort of knew it was a fool's errand. We knew that we were in that for a tight scalp. If you can do things like that on the fly, in the live market, you can be a profitable trader. Let's see. We got a lot of questions here. Can't wait. Can't wait. The first Q1 is gone. Yeah, absolutely, Tina. Q1's in the books already. It's been a pretty good Q1. I mean, a ton has happened. An absolute ton has happened. Let me see, Tina. Review Q1 and hopefully Q2 can get a bit better. I'll be honest with you. The play I'm looking to make is Q3 and Q4 this year. I think it's going to be a lot of fun when they start cutting interest rates. Then it's going to be really easy. Right now, we're trying to decide to buy pullbacks in stocks or to wait. Let's have a look. June E-mini S&P 500 futures. This was the same CFD as we were just trading over on our MT5 platform. Let's take a look at our 30-minute chart. Okay, there it is. All right, we just got another signal. Another signal right there. Do we take that trade? I'm not interested at all. I'm not interested at all. You can see, though, there's your bid on the E-mini S&P 500. There's your bid. You'd be shooting probably for somewhere right up in there. Could you get this? Yeah. You don't want to get in the way right now. This is really an ugly down day. I thought right in here was pretty good. This next 30-minute bar, we call it, let's see, this will be B period. Well, actually, it's C period, but it's going to be the next 30 minutes. You don't take trades like that. Not against this trend. Sorry. All right, in any case, we're going lower. There's your E-mini S&P 500 futures 30-minute chart. So we've sort of breaking beneath value. There's your point of control, and now we're moving lower. You can see the huge volume in our first 30 minutes of trade. All right, so what should we do now if we're looking to trade some of these stocks? Let's back off to the US 500 here, sort of see if we can find a macro level to play off of. Is this pullback serious? It's extremely serious. Daily chart, US 500. It was a long time ago when we were up there at 7,000. The game's changed. This has been an ugly week, and it's getting uglier. Let's go down. Let's go to a weekly. Let's go to a monthly. This is the one. Macro levels on short time frames can be very good. Okay, so what are we doing right this minute? Let me get my crosshairs going. All right, 64.34 is our 13-month EMA. We're trading right there at 64.17. This is a big-time zone, big-time area. If today's trade doesn't bottom out somewhere down in here, we could be going much, much lower, and we may be going much, much lower in April. Spike low, we want to go from those panic lows that developed back on the COVID panic of 2025, April 2025. That seems to be our biggest economic event, really, aside from this war since Trump's been in office. And then right there, 61.77. 61.77. So it's about another 250 points, 223 points down the queue. That could be absolutely huge. That could be absolutely huge. So I'm watching that closely in the US 500. Let's go to the US 100. Got a question over there. We'll grab that in just a second. US 100 is fascinating. Same basic market structure. Tariff panic lows of 2025. You get up there with that double top, and now we're pulling off 22.5. Looking at 22.5, so we're breaking beneath that 13-month EMA. 23.4, 23.5. This isn't good. This is extremely bearish. It's extremely bearish. All right, let's go to our US 30. We've been covering this pretty much religiously, and you can see there's our pop. So the US 30 sort of leading the way in cutting into this macro wave. It hasn't been as smooth of a ride for the US 30. You see there's a little spike low right there. Still, though, the range you need to be working off of is that April 2025 low, panic lows. And then right there, we hit it beautifully. What's the low right there? 49.071, 49.121 was our 38% level. Let's just take a look at a 30-minute chart. We're heading there again. So there was the action. There was the action right down in here that came across the board. Let's see on the 23rd of March, which was what, Monday, right in that zone. The statement came through from Trump, the Truth Social post, and you can see you're still going sideways. Just unbelievable. Look at this move. Now we're trading down towards the bottom of that. There's Trump's tweet. Says we have a deal. Says we're backing off of the ultimatum. You've traded inside of that all week long with the US 30. All week long. Now what? We're starting to push the bottom of that range. Is it time to send another tweet to say the war they won the war? That's been the talking points out of the White House, that the war's over and they won. Why are they still fighting then? I'm hypercritical of everything that's happening right now. It's not that I'm one side or the other politically. I'm very critical about this because you've got a situation here that looks financially like it's going to be a real mess. I'm starting to think it's COVID part 2. I really do. we could see this market absolutely explode to the downside, just like we could see this one and this one. Big time stuff. A couple of things that I do want to check, though. Let's go ahead and just humor me for a minute. I'm sort of thinking out loud here, but what we need to do definitely is we need to go to our 50-20 SMA. This is big. This is very, very important because the whole world's watching this 50 simple moving average and 200. All right. When the 50 crosses under the 200, it's a death cross. Everybody in the world's watching that. Stock traders in a big, big way. Golden cross, when the 50 crosses over the 200, what do you got there? That's a bullish market. So that golden cross came right after your tariff panic, produced big-time gains to the top side. And now look what's happening here in this US 100. You're working on a death cross. If this gets worse, maybe by the end of next week, you'll have a death cross. That means there's going to be a lot more shorts coming into the market, institutional shorts in investment. That's big. I'm watching that relatively closely. How about the US 500? Not quite as dramatic as the US 100, but still that 50's coming down on the 200, and life's getting really tough under there. It's getting really tough for bulls right now. They're, are you squeezing them out potentially? Look at that. Breaking hard in that US 100. US 30, not quite as bad. Not quite as bad. You still have a pretty good distance here, but still beneath the 200 moving average. Let's go to the US 2000. This is the Russell 2000. Surprisingly, the Russell is holding up a little bit better than the others. It's not beneath that 200 simple moving average yet. That's very surprising. Typically, the Russell, when things go bad, it takes it on the chin worse than anybody, and right now it's sort of holding in there. Fascinating time to be in the markets. Absolutely fascinating. No two ways about it. Let's see, we have a question here. 1906, Ms. Good to see you, 1906. Hey, Shane, in this environment, is there a situation that you would hold a trade over the weekend? No. There's one situation if I was way ahead. So, like, let's say, I'll just give you an example. Let's say I was trading gold. Okay, let's say we took a gold trade and, maybe we sold a couple days ago. Let's say we sold this 50. We sold 49.70s or something like that. Yeah, let's get a little more conservative. Let's say we sold like 4,500s. And we're going in today and we're printing right now. Let's say we go off the board today printing 44.57, something like that. Yeah, if I was far in the green, if I was way in the green, I would consider holding it. Just because if you close and then you reopen, you might get a much worse price. The trade still might go in your favor. So what I'm saying is this. I know I'm sort of not really articulating this very well, but let's say I'm short from there. And let's say we close gold somewhere. We look like we're going to close down in here by the end of the day. Now, one of the things that could really help us over the weekend is let's say that dollar gaps up on the open, and let's say gold opens way down here. Let's say something like that happens. Let's say something in the bond market goes crazy. The 10-year note or something goes crazy over the weekend, and you get a big negative gold open. That would be a situation where you're playing with house money. You have all this money in here, and potentially if you open like gap down, you could be huge. It could be a huge trade for you. Now, there's no way I'm holding short golds. This is just an example. Probably a bad one, but maybe Great Britain pound USD, right? Maybe I'm short from up here, and we close down here. Maybe I went short right at the beginning of the week, and I'm short here. Maybe if the U.S. dollar gains a lot of puff over the weekend, maybe I'm doing something maybe down in here. Maybe it opens down in here. That's going to give me a chance maybe to risk this and get a really big banger, a really big move. That is the only way I would consider doing it. I would not consider opening up a trade today and taking it into the weekend in any market. Now, that's just me. Now, before we go any further, I need to stress that I'm not a financial advisor. I cannot tell you how to trade, and I cannot tell you what to do with your money. All I can do is show you some of the technicals, show you some of the fundamentals, and tell you what I'm thinking. That's all I can do. And if you don't understand how much risk is involved by carrying these positions over the weekend, a brand new position, then you probably shouldn't be trading. I mean, I've heard horror stories in the last 4 months. The one I keep bringing up is somebody went home short gold, and this was back in January. They went home short gold, and it gapped up on Monday's open. They were on the hook for $40,000 over what they had in their account. remember, where that market opens, you're on the hook for all of it. So if you have $10,000 in your account, and let's say you go home short maybe a lot of gold or something, even though theoretically you have the margin money to do that, if it opens up, let's say it opens up $25 or $30 over, where you went in, that's a debit to your account. You're in trouble. You're in trouble. You're liable for that. What the broker's going to do is they're going to close it immediately, and they're going to get you on the phone and send you the bill. And it's going to be up to you to deposit the money into your account to cover your losses, or they're going to take you to court, and they're going to take your house and your car and everything. I don't want to see anybody making that mistake. As a day trader, as a short-term trader, that's a bad one. That's a mistake that is a bad one. Now, on the other hand, on the flip side, if that person would have went home long, this is a real story. Now, if that person would have went home long, they would have been plus 40,000, and they would have thought they were the kings of the world, or the queen of the world. Truly gambling. I'm not interested. If I want to gamble, and I probably will later today, I'll bet on the basketball games. I'll bet on March Madness. I'm not interested in gambling with my trading at all. This is a business, and it's a serious business. It's a serious business. You can lose more money than you ever dreamed of if you're sloppy and you do stupid things like that. But you can also make a consistent living, and you can also make windfall profits if you put your money in the position at the right time. That's all there is to it. That's all there is to it. I mean, I made a video, like I said, I made a video earlier actually yesterday. I was shooting one on insider trading. And let me show you just, how much money is at stake with some of this stuff, with the futures especially. Let's go June futures, and then we'll go here. I'll sort of show you. Okay, we want the E-mini S&P. This was a trade that somebody made on Monday with the inside information. And this is how much it really broke down to. So a lot of us we get caught thinking small. I'm guilty of that. Guilty of that as anybody. When you start thinking big, which is what you're doing, taking positions home over the weekend, you're thinking big. This was the dynamic Monday morning. This was it right here. Okay, we had a spike in volume right there of about 4,500 contracts in the E-mini S&P 500. That came across the board at about 6:50 a.m. Eastern. Okay, Trump's Truth Social post right here that said there was a deal in place and things were looking good and the war was going to be over and the backing off the ultimatum and all the lip service that has not come to fruition yet 5 days later, this brought the markets to life. Everybody saw this as good news that the war was potentially winding down. The energy was going to be back online. This is the S&P 500 and what happened. This is before the market even opened. Okay, this is 2.5 hours before it even opened. Right there, big spike, 15 minutes before the post goes off. How much money was really at stake? Okay, if you got in right at the top of that 1 minute bar and you got the worst price there was and you got out 1 minute, I'm not even counting any of this run or the giant run that happened after that. I'm not even counting that. I'm just counting right here at this 1 minute bar. If you saw his Truth Social post hit and just held it for a minute and missed out on all of this, you made 111 points. 4 ticks a point, 444 ticks at $12.50 per tick. That's a $5,500 50 move, $5,550. Okay, $5,550 move on one contract, one. For about what? 20 minutes of work? 1,000 contracts was worth $5.5 million. Right there, take a look. They traded 4,500, and that's not counting all the folks that were going long right in here too. That's a staggering amount of money. That's what playing in the big leagues is. Now, somebody had inside information. There's no question about it. There's no question about it. There should be an investigation right now on that. The people at the exchange know. The brokers know. Everybody knows who did that. Nobody's saying anything because it's private. It's confidential. Your trades are confidential. But somebody needs to get a subpoena and go look at who made the trade, right? Because if they knew what was going to happen here ahead of time, that's insider trading. It's illegal. But that's how much money's involved. And what I don't want to see is I don't want to see you guys maybe go home. Maybe you're somebody that says, hey, listen, this war is not going anywhere. This is going to be a tough Monday on the markets. I'm going to go ahead and I'm going to take a short on the S&P 500, and then to have something like this happen to you where you're just absolutely slaughtered. By the time you get to your computer, you're way down, way, way, way down. I don't want to see that out of any of you. That's what happened here. There was people that were holding shorts into the teeth of this, and they got hit, and they got hit hard. Now, like I said, I got involved in something real similar to this last summer with gold. The loss wasn't that bad, but it was bad enough to make me cringe and step back for a while. So if you don't learn anything else from these streams, learn how to protect yourself and your money. And by taking new positions home over the weekend, I respect you. I respect your aggressiveness. I respect it. I love aggressive traders. Don't get me wrong. I know all you hear is me talking about waiting and being patient and relying on your technicals and staying cool. But I'm aggressive. I'm an aggressive guy. And there's a lot of you that are aggressive traders. And I respect that. I really do. Now is not the time to be doing that. Now is not the time to be taking like a short gold home or even a long gold home. I mean, oh God, you're just opening yourself up for one of these type of catastrophes. Don't do it. Don't do it. Caution's the better part of valor. Live to fight another day. Come back Monday. We will make money by next Friday. You know, it's one of those deals. I don't know. That's my rant for today, though. That's my psychology session. Great question, though, 1906. I hope you stuck around to hear the answer. Let me see. Eli, the Great Britain pound Australian dollar. Yeah, let's go ahead and look at that one. Let me see. Stephen, market war. What is it good for? Absolutely, positively trading. There you go. When you have the inside information, people making a lot of money, man. A lot of money. And the funny thing is that wasn't an isolated incident. I believe it was the next day that right before the close, Trump said something too that drove the market. Now, I'm not insinuating that the government's in on insider trading. It could have been anybody that knew that. That tweet could have been written the night before and somebody saw it and it was on the platform. It could have been a tech guy. It really could have been, or it could have transmitted it, could have wrote it, transmitted it to the platform, and it could have got lost in transit. There could have been somebody outside of the residence there picking off all the data that goes in and out. It could have been a foreign national. It could have been foreign governments. Nobody knows what happened there. They better find out. They better find out because that looks bad. That really looks bad. We have confidence in our markets. We have to believe in our markets. They're taking our money. We're giving them our money. All right? They're holding our money. And the game needs to be as fair as it can be. There's a lot of people watching this that are laughing in my face right now, but it needs to be fair. You have to have confidence in the markets. If you do not have confidence in the markets, you will not have markets very long. We're seeing the same thing happen in sports right now. All you see, because the gambling is legal now in the United States, and everybody's got DraftKings on their phone, and they're sitting there and they're gambling all day long on these sporting events, and all of a sudden, every call is starting to be suspect. A lot of things are happening that don't look to be on the up and up. Players are getting caught shaving points. Pretty soon, nobody will wager anymore. It'll be the same in the markets. If it's a rigged game, there's only going to be a few players in there. Nobody's going to be in there. I won't be. If this thing looks rigged day in and day out, I won't be a part of it. By and large, your markets are big enough to where they don't look rigged. Now, there's certainly trends and things, and we can argue all day long, but that was probably the most blatant instance of insider trading that I've seen in a long time. You mean to tell me that you went long 4,000 contracts ahead, 15 minutes ahead of a True Social post that was going to run the market during a time of war? Get out of town. Get out of town. All right, that's enough of my rant. Great Britain pound Australian dollar. You can see right here we're on a pretty good tear, really. A nice, what is that, 7-day tear, something like that. I'd be buying pullbacks. So, Eli, if I'm in here trading aggressively, you guys pretty much know what I do by now. Fibonacci's 190, 155, so you're still a ways down the queue. Can you do anything on a 4-hour chart? Yeah, we missed it. It looks like we missed it. But your quick hitter, for a Friday session, this would have been your quick hitter. Doesn't really do you much good now, but 62% is beautiful, very tight right there. 190, 328, 190, 284. So you've got pretty good volatility there. Now you're starting to rally. So this market structure is still intact. Nice demand zone there. Really a big time sell-off. Once again, gold is definitely towing the Australian dollar around by the nose. Be careful with that. Nice big pullback, and then you're sort of on the rally to the north. Let's step back to our macro levels. See exactly where resistance. I know we had a resistance zone up there somewhere. Right there, a spike high, which would have developed back in October 2025. Spike high there, spike low. So your kill zone's still about 195 and a quarter. About 200 pips. 200 pips north is a pretty good shorting location. Pretty good shorting location. I would keep a close eye on that one. Not a bad one. That's for sure. All right, let me see, Eli. I need gold support this level. Yeah, you do. Let me see. Stephen Market. Shane, I check into the stream for the first time in a month, and you're still talking about that gold loss last summer. Learn from your losses, Stephen. Learn from your losses. Learn from your losses. I haven't forgot that one. I tell you what. I haven't mentioned it in a while either. Maybe that's just fate. Maybe you tuning in hearing about one of my good losses that I remember, that I actually remember, is sort of maybe trying to guide you in the proper direction. Maybe your risk is a little bit out of whack. Could be. Maybe it's fate. All right, 1906. I appreciate that. A couple of things we need to cover, and then I'm going to go ahead and sign off. We've gone on long enough here. A lot of fun, though. I like the U.S. Open. A lot going on. Week 13 here. You can see consumer sentiment is going to be, I think it's already dropped. It was something like this. I wouldn't even worry about that. That's old news. This is interesting, though, and this one drops later today. These are events you need to be watching if you're going to be in the markets today. FOMC member Barkin and Daly, they're both going to talk about interest rates. The Baker Hughes rig count, that's going to be a big one. Believe it or not, the impetus is going to be on the United States to really get involved and make sure that they're producing a lot of oil. Right now, our rig count is very low. This is over the last year. The rig count was up about 481 at this time last year, and the contraction has been astounding, down to 415. This needs to start going up in a hurry. The crude oil rigs in the United States increased to 414 March 20th from 412 the previous week. Crude oil rigs in the United States averaged 498 from 1987 until 2026, reaching an all-time high of 1609 in October of 2014 and a record low of 98 in August of 99. Back in 2014, 1,609 rigs. That was the big shale oil boom over in the Bakken oil fields. I was there. I saw it. That was when we were drilling 24 hours a day, 24 hours, and anybody that could get a rig out there was, because it was worth about $100, $120 a barrel. Big time stuff. Interest rate expectations, they're changing. Pricing in a rate hike now, 4% chance. 4% chance of a rate hike in April. How about June? Only an 8% chance. This is crazy. How about July? 14% chance. Take us to the end of the year. Look at this. You're pricing in rate hikes by the end of the year. Remember me saying that we're going to be over around 2.25%, 2.5%? They're pricing in rate hikes. That's going to devastate the real estate economy. That's going to devastate a lot of traders that decided that they were going to be take long positions in stocks. If interest rates start going up, stocks are going to come down. And that's going to be the end of, that'll be the end of the Republicans in the midterms. No question. You can already see what's happening here. But it is happening fast. It is happening fast, and that's something that we definitely need to understand. I mean, 1 minute's not the same as the next. I'd be remiss if we didn't cover this before the weekend break. These are our poly market odds for what's going to happen in Iran. U.S. forces enter Iran by. This is the big one. This is what we're watching over the weekend. Only about a 20% chance March 31st. A lot of action in this market right now. Everybody pretty much knows that the weekends are when news has been made when it comes to the Iran situation, because that's when the markets are closed. March 31st, we're bet at 20% chance, so that's by Tuesday. I don't know, 63% chance says you're going to be in there by April 30th, and by December 31st, a 70% chance. According to these people, these traders, they believe that the U.S. is going to put boots on the ground in Iran, and it's going to happen relatively soon, within the next month or so. So ceasefire, they believe they'll have a ceasefire this year. I don't know. Will the regime fall by March? It's not going to fall anytime soon. They've proven that's not going to happen. And this is really one of the hot zones we're watching, Karg Island. Karg Island is no longer under Iranian control by. They believe that there's a legitimate chance that the United States and allied forces are going to go after Karg Island. If they do go after Karg Island, let's say they do it this weekend, if it looks like it's going to be a massive fight and not just a complete surrender, it's going to drive crude oil through the roof. Stocks will go way down. Crude oil will go way up. If that doesn't happen, then things may stabilize going into Monday's trade. But I have to tell you right now, just by looking at our charts, we've got the VIX back up over 30 right now. We've got WTI crude oil trading about 97.80. This is an extremely bullish situation for crude and an extremely bearish situation for stocks. That's for sure. All right, everybody, I'm going to go ahead and sign off. I've been going for about an hour, so I hope you enjoyed the U.S. Open. We only took one trade today because I was talking more about psychology and fundamentals. But, you know, I mean, the trades are there on that 9 EMA. I mean, you could see it. We sort of had another one come across the board right there that proved to be a pretty good trade thus far. We just got to wait and see what happens. This was a good one. That was a good one. This was pre-market. That was a pretty good one as well. Highly risky, though. Highly risky. Have we found a bottom yet? Has this market bottomed just yet? I don't believe so. If I was looking at the E-mini, S&P 500, wherever it may be, go right here. US 500. Let's look at the US 500. Just my macro look at what's happened in the first hour of trade. We're coming up on an hour of trade. 30-minute chart. What do we have? US Open right there. Then we're sort of getting back up into this area. Let's go to a 5-minute. Is it rotation? Pretty good rotation. Open for business right here. Pull back. Threaten the highs. Came off. What do you think is going to happen next? If I was betting, I'd say you're probably going to go to the lower side of this equation. Spike high, spike low. 62% was a nice sell there. 38% you're seeing the consolidation. Yeah, I don't want any part of that. That's a challenge. That's a real challenge. All right, everybody, I'm going to go ahead and sign off. Absolutely, Tuku, you have a great weekend as well. Be sure to check back in with us next week. We're going to have another lineup of streams for you. I think it's going to be a lot of fun. We're going to see a lot of fireworks. Remember, if you're taking anything home over the weekend, say a prayer. Say a prayer, because you don't know where these things are going to open on Monday. Crude oil up, stocks down. I cannot stress that enough. That looks to be the game. Be ready for breaking news. Just be ready for breaking news. We know that it's coming. We know that it's coming over the weekend. So as long as we know something's happening, it could happen. We didn't even get into crypto. Crypto's on the move south. Keep an eye on crypto. Bitcoin's off to 65,000. Remember, 58's our kill zone there. Shiba Inu's down big, getting into my personal kill zone for there. Ether beneath 2,000. Dogecoin falling beneath 9 cents. These markets are heavy, heavy. All right, everybody, I'm going to go and sign off. You're welcome. Tina, you have a nice weekend as well. And as always, if you guys need anything, you can reach out to me at howtotrade.com. Send me a private message. I'll get back to you in short order. Until next time, trade the action well, and we'll talk soon. See ya.